What's up, y'all boys? I will be going over my December 10th market analysis. I did not enter a trade today. I was in class taking a test. But basically, afterwards, when I got home, I started analyzing the charts. And first and foremost, I went on the 4 hour. And first thing, honestly, was similar situation to yesterday, was equilibrium again. So we noticed this whole big dump in the market, 4 hour, and then go down to the 1 hour pre-market. All right, well, first of all, we see this whole, like I said, dump in the market, and pre-market, we see this sort of retracement on the 1 hour starting to form. So again, first, after I marked up equilibrium, I started marking up my high resistance draws on liquidity. So we got these lows, these highs. So these were my main two for highs and lows, draws on liquidity. And so yeah, right here we see a 1 hour BPR. So this is two fair value gaps right here. And I'll get to that later. This is a 15-minute fair value gap. And so yeah, we see, honestly, this is just right now it's just a huge confluence area right here to enter. So yeah, I'm expecting a bearish price movement for today. And so yeah, we see this retracement, like I said, and market open, we get a sort of movement. Obviously, I'm on the 1 hour. I was doing my market bias on the 5 minute, I think, or 15 minute. Let's go on the 15 minute. And so yeah, like I said, we have this 15-minute fair value gap. We see this BPR. We see these draws on liquidity. We see this huge equilibrium. And lastly, let me get into this. Huge, just like yesterday, we see an SMT. Obviously, this wouldn't have been part of my confluence for my trade on Nasdaq. I would prefer to take a trade on Nasdaq over the S&P, simply because of how price action was, and simply due to my risk to reward ratios, what they would have been like. Obviously, this is a much smaller risk to reward ratio than what I ended up having on Nasdaq. Obviously, like I said, I didn't enter a trade. But yeah, this would have been the SMT right here. We see after market open, we see these highs, and Nasdaq we see lower lows. So obviously, SMTs are just one of the best confluences, honestly, in the trading game, in my opinion. So this would have been a decent confluence to enter based off of. It's just price action, in my opinion, just hasn't been the best on the S&P. I've been seeing much better price action from Nasdaq. So, and simply because of all of these, right now, BPR or fair value gap, BPR draws on liquidity here, equilibrium. Honestly, that was just, I would have felt much more confident entering a trade off of this. So yeah, I'm gonna scale. Say I'm on the 5 minute already, and basically, I think this was actually, I don't know. Never mind. So yeah, 5 minute after market open, we get this leg up, and so now we are in this high confluence area, tapping into this fair value gap, 15-minute fair value gap. So yeah, this is just a huge area right now. I'm like, all right, bro. If price ends up, sweeping this liquidity, I'm probably gonna enter a trade. So we end up seeing these two leg downs. Obviously, right here, I was analyzing and I said, all right, what would I have done here, right? We see this huge leg down. I would have probably waited for, I'm thinking we're sweeping this liquidity. I would have waited for a 5-minute retracement and then a 1-minute break of structure. So I was over here. I was like, okay, so we got a 5-minute retracement here. If I scale down to the 1-minute time frame, what are we going to see? So I'm glad that I wouldn't have entered here, because I would have ended up getting stopped out. So this was obviously, the leg down. I was like, okay, retracement, right? So I get my 5-minute retracement, but I'm waiting for a 1-minute break of structure to the downside. This was a mistake that I made yesterday. Obviously, it was a winning trade, but I think I'm going to end up starting to wait for that 1-minute break of structure to the downside, because if I were just to say, all right, we get the 5-minute retracement, we get a little bit of selling pressure out of it. If we enter here, stops above here, we end up getting stopped out over here, right? So So today, what we should have done is, all right, so if we have a 5 minute retracement, sure, wait for that break of structure on the 1 minute and then enter, right? So obviously we ended up closing above this high. So I basically would have just disregarded this right here and I would have waited for now selling pressure again off of the 5 minute, which we ended up seeing. I don't think this is, yeah. So we ended up seeing selling pressure again out of this, or shit, wait, where am I? We ended up seeing, again, sweeping that. Hold up, bro. Let me analyze this real quick. So yeah, we see. Bro, wait, well, hold up. Let me get it right. Oh yeah, sorry guys. So yes, again, we were looking at this. So then we end up closing above this high. And so now we're waiting for selling pressure again. So we see these two red candles. And so again, 5 minute retrace. We see this 5 minute retrace, this green candle. Then we scale down to a lower time frame, the 1 minute time frame. And then yeah, bro. This fair value gap gets tapped into. And then I mark up my equilibrium. So right for the retracement, right? We're expecting the 5 minute retracement. So this was it, the retracement into equilibrium. Perfect right there. And then finally, we wait for the 1 minute break of structure to the downside. So we would have ended up entering around here. Obviously, like I said, I didn't enter, but I would have ended up entering about right here. This was our previous low. Obviously, after the retracement, this was our low, and then we close right here, enter about right here. Stop would have been, honestly, if we entered about right here, our stop would have probably been, it depends on how much you're willing to risk or how much you're, I don't know, but I guess stops would have been somewhere around here, and then take profits would have been somewhere along these draws. Obviously, I'm on the 1 minute, so I'll probably scale to the 15 minute and mark up where I would have. So yeah, so if we were to enter right here, that's a first take profit around here, second take profit around here, and I guess that's honestly where I would have ended it. I probably wouldn't have gone anymore after those two. And one thing I'll say honestly from trading is I've realized that putting my take profits somewhere above like these huge areas of liquidity, putting them somewhere above it, honestly works out for me pretty well, right? But obviously that's something that I got to reflect on and back test a little bit more. But yeah, I usually like to put my take profits a little above these liquidity levels. So yeah, that's basically my trading recap for NASDAQ today, December 10th, my market bias. And so yeah, key takeaways, basically, again, like I said last video, 4 hour, 1 hour draws on liquidity, highs, lows, and then you want to mark up your high time frame confluences. So, we got fair value gaps, BPRs. Like last video, we had a pretty good order block that we tapped into. So yeah, that's basically, high time frame draws on liquidity, high time frame confluences, scale down to the lower time frame, and then we see this fair value gap. And so yeah, basically just fair value gaps, order blocks, breaker blocks, and equilibrium. Honestly, that's a huge one. Equilibrium, I love equilibrium. So yeah, again, you want to mark up your low resistance, also draws on liquidity, highs and lows. We didn't have any today. And low time frame confluences, so the same as the high time frames, so that you get a more optimized entry. And then after that, you want to wait. So for example, today we waited for that huge, confirmation, liquidity sweep, and then after the liquidity sweep, you want to wait for a 5 minute retracement. So if you're going short, 5 minute retracement to the upside. And then from there, you want to do your 1 minute break of structure to the downside. And then that's where you enter off of, and then take profits just around certain draws on liquidity. So like I just showed you guys. And so yeah, boys, that's basically it for today's trading recap. I'll see you guys in the next one.